Hello and welcome back to Chart Pattern Trading Masterclass by Wealthy Education. This video, we're taking a look at the diamond top pattern. So, the diamond top pattern, which is just the exact opposite of the diamond bottom pattern, is when you have basically action like this after a big move higher. So, the idea, of course, is that you're seeing a bit of volatility after a trend to the upside, and therefore a little bit of confusion. You can typically draw trend lines like that. It doesn't have to be an exact diamond, it can be a little elongated in one direction or the other. The gist of it is you want to see a lot of indecision after a lot of um, momentum. So in this Bitcoin chart, you can literally draw a diamond shape with trend lines. And that's exactly what this is all about. In this particular case, what's worth noting is that it was at a previous high. And then, of course, it broke down below the 50-day EMA. That has people thinking, hey, maybe the trend is shifting. And we went all the way down to that support level rather quickly. So you can see how um, that kind of played out. Let's go over into the stock market. Let's see what we can get into over here. So XLE, which is the energy sector, it's an ETF in the United States, and you can see it's been drifting quite a bit higher for some time. Now you can't call it this yet, but this could be a potential diamond pattern, especially if we break down soon, because you could make an argument that we're at a recent high. You pull up the MACD we just crossed, so that's a sign of weakness. Also, um, I suspect, yeah, relative strength just peaked into overbought as well. So this is something that you would want to watch. If we break down below this trend line, that might set up a pretty significant move to the downside. Could fall all the way down here. So that's an example of a potential diamond pattern setting up. You can see that there is a diamond pattern here. So again, it's a bearish diamond pattern because we had been in a major uptrend and broke through it. So by doing so, we broke all these lines, dropped right back down to support. You see that time and time again. And that is part of the reason why support and resistance is so important. It's also worth noting that the area at that diamond was right at 80, which had been resistance a couple of times in the past. Granted, we blew through there previously, but you can see how that kind of comes into the picture. And of course, crypto, not going to be any different than any other market. So let's take a look at Polkadot. And I will, since we don't have as much history in crypto, I will go to a smaller time frame. In this case, the 4 hour trend line there, trend line there, there, there. There's your diamond pattern. It's a 4 hour chart, so we can do 50. We can also do 20. We can take a look at those. So there's your 50. We broke down through it. Um, you could also, since it is a crypto chart, pay attention to volume. Volume picked up over here, right in the middle of this, and then started to fall off of a cliff. And then, of course, another thing that I would bring to your attention is right around here, right around $24. You can see Polkadot had major support. And really, if you look at this, let me go ahead and hide all of this. But if you um, look at this. Put this back up now. And I move this to a line chart, it really kind of comes into the picture. You can see major support in this general vicinity. We collapsed through it. We came back. We tested it again, found that resistance market memory, and have just fallen off of a cliff since. So you can definitely see how that plays out quite handily. Um, Pretty common pattern. Again, you're looking for a move higher, a little bit of confusion and choppiness. Typically, it shows that the buyers are running out of momentum. And then if it breaks back down, everybody who's long starts running to either protect their positions or cut losses. So in the next video, we'll take a look at the bear pennant.